satisfied, let us know and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good. Billy Ray, feeling good, Lewis. I posted a chart of the gentleman who's been selected as Santa Claus of the Year for 2022. As you can see, his mathematical proportions of his body are absolutely in alignment with the Fibonacci sequence of numbers. You can see that chambered nautilus overlaid on it. He won over 2,700 other applicants, and mainly because his proportions were so perfectly related to Fibonacci, and he won on Fibonacci Day, which was last Wednesday. How important could that be? Oh my goodness. Now we're going to show you a chart that I think you're going to enjoy. This is the chart of the Treasury notes. This is the number one commodity that we trade here, folks. We'll get up here so you'll be able to see it. This is the weekly chart. This is going back. Now, we've been bearish bonds for several years, as you know. When they tried to tell us a story about negative interest rates, everybody had to do that. Well, that didn't quite work out, did it? Anyway, this says my chart is dark and out of focus. Well, to me, it's not, Al. Let me try to do it again, and we'll see if I'm able to bring this chart up to show what we're looking at. I don't know what I'm doing wrong. It's bright and clear as a bell to me, so we'll take a look at it, and then we'll get up here to see it, and there it is. Okay, now we've got it. Okay, this is what I want to show you, folks. You'll notice we have the big A, B, C, D move down here. At that point, we said we're going to get at least a $10,000 rally in Treasury notes and Treasury bonds. We've exceeded 10,000 in the Treasury bonds, of course, by about $1,000. But here's where we are with the Treasury notes. If you'll notice here, we're setting right at a 382. Why is that important? Well, folks, over the past several years, all I've been able to try to tell you folks that every time this thing has hit a 382 retracement, it's gone down, and that's exactly all it's been doing. That leads me to the first question that someone asks about here all the time, and it is why I don't use astrology when I'm trading. There's two reasons for it, folks. I'm very interested in it, but it's so far over my pay grade because of all the things that you have to consider that I just couldn't do it. And I had to keep it as simple as possible, and I keep it as simple as possible by using ABCD. Does ABCD work all the time? Oh, for heaven's sakes, never. That's not even a question to even ponder, because there's many times that it doesn't. It only works about 65% of the time. But at that time, that's what's important. It gives you a spot to where you can enter a market and not worry too much about it. That's what I try to do when I do these trades. I'm pretty good at it. I don't profess to know what the hell's going to happen. Whoops, that's not nice during Christmas to say something like that. I don't know what the heck's going to happen next, but nobody else does either. So that's the whole key. Remember, as soon as you realize that this game is nothing more than a probabilities game, and you don't need to know what's going to happen next, then you can trade with abandon, because you don't need to know what's going to happen next, because you're never going to know that. Even when you think you know it, you're not going to know it, because that'll be the time that it hurts you the most. So anyway, this is what we're watching here today here in the Treasury notes. Now, what I thought I would do is just expand upon that a little bit to show you what was happening on a daily basis. So all we're going to do now is we're going to bring up the Treasury notes for the last several months, October and November, and we're going to bring that chart up so you'll be able to see it. And all we're going to be doing now is looking at these patterns, okay? And as you come up and see, there's where we were last October. You see we came down, we made the bottom, then we made a higher bottom right here at the 786 retracement. That led to an A, B, C, D. The 1.618 expansion on that measures up here to 113.17, the high to the day. 113.17. But if you look at this over the last several days, now this is a daily chart. So you have 3 days up and then a pullback to the 78% level. And then you complete the ABCD. And where does that complete? At 113.18. So at 113.17, you have a 1.618 expansion. You also have an ABCD. Now you're down well over $600 from that level, actually $1,200 in the Treasury bonds. So that's why it's so very important, because if you look at it really closely over these last few days, this market has really done very little. And when it's hit it so many times here, 3 times now, we've hit the 382 on the weekly on the Treasury notes. That was the main reason why we were expecting the market, the stock market, mainly to come down here during that time, because here the number one thing that makes the markets move, which is bonds, is making a topping formation in a very bearish market. I mean, no one can say this is a bullish market. It's just had a nice bounce, and we could have one heck of a move up from this level for sure. But before that happens, we're going to have a sell-off, and that's what we want to see. Will bonds and notes make new lows? Don't know the answer to that, but you know what I said just a few minutes ago. Nobody else does either. They can tell you that they know, but nobody else does either. I've been asked to comment about what's going on in China with all the stuff going on with COVID and the students out in the streets in all these different cities. That is a major problem for China, folks, because they control so much that this is not something that they like to see, is people coming out and doing something like this. This is similar to what happened at Tiananmen Square in 1979. I don't think it's going to end up that way, but anything could happen. They will clamp down on it. They didn't clamp down on Hong Kong like they should have, but they'll probably do it this time if it gets any worse, because that's one thing they do not like is dissent over there. So, but once people get started at it, oh brother, as we've seen so many other places, who knows? Over my pay grade, don't really how it affects the markets, don't really know. All I do is I just do the 1 or 2 little things that I see to get me to where I want to be, and that's what I want to do. Is I'm doing these things here each day, trying to chat with you about what I think is happening in the markets. Now, I wanted to talk here. We've had a market that's had a big move today, and I want to bring it to your attention here, because here again, we're looking at markets that sorry for the voice, folks, nothing I can do about that. Hold on, here's where we are. You'll see this is crude oil this is the back here on November the 7th. That was a daily 382 there at 92.82. We said to sell it short there, and we did, and the market's been coming down ever since. We had a really nice 382 retracement here last Thursday, as you can see, and then as you see here today, we've been heading down and down and down. But I wanted to point this out to you, because what's happened in crude oil now is been very significant, because we've rallied $4 a barrel. And why did we rally $4 a barrel in crude oil? You'll never guess, boys and girls. Johnny, put your hand down. We know what you're going to say. And Johnny's got his little placard up, and it says AB equals CD. So we'll show it to you, folks. And right after we pay these bills, we're going to give Johnny a lollipop, and then we'll be right back to talk about crude oil. 877-927-6648.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I want to spend a few more minutes here on the crude oil. This is a daily chart, as you can see, going back several months, but the main thing is the fact that we hit the 382 level exactly. I mean, to the tick, both times. I mean, this, I think, was 2 ticks higher than this one, and now we've come down and we've broken from that. And this was the big 382, folks. This was at that 90-some level. Anyway, that just made the big ABCD down there at 250, and so we've had a pretty good rally today. It looked like the 75.80 was going to hold it earlier this morning, stayed there for well over 2 hours, and then once we went above 76, market exploded all the way up to the 78 level. So we've come back almost $5 a barrel off the bottom. So this is a significant bottom in the crude oil market. So that's what we're paying attention to here today. So I want to bring this to your attention too, because there's several things on this chart that are really important. Not just the 382 and the fact that it was a 78% level of the high that we made way back here. So you had a 78% level hitting twice. You actually hit the 382 3 times. You hit it once, twice, and then the third time right over here. So I mean, this is a really important point. We're in crude oil right now because this is a real seasonal time for the heating oil and gasoline, and also, well, not so much gasoline, but heating oil and crude oil have a real strong seasonal now because of the colder weather coming in. And we know colder weather, even here in Arizona, in the evenings now, it's into the 30s. So we get to be up to about 75 during the day today, but it's pretty cold at night. Okay, now I want to move over and talk a little bit about the stock market. I had several people ask me why I was so bearish on stocks. At least, when I send out the videos, and by the way, I've got the videos working now, folks. You get them instantaneously. When I send them out, you're going to get them within 30 seconds. I send at least 1 or 2 every night, and then I send an update in the morning of charts that we're looking at for potential trades. So if you're interested in that, contact the 24/7 people at TFNN. But let's get up here, forget the commercial, and talk here about the stock market. Here's what we were looking at in the Dow Jones, folks, as we were coming in. Now, this is the Dow Jones Industrial Average, 30 stocks. They are price weighted. They are not cap weighted. So if it's an expensive stock like Goldman Sachs, United Healthcare, And Caterpillar and some of the others, they're going to get a higher weight. So you have 30 stocks. Some of them are really cheap. Intel and some of the others are really cheap. So what you got to do is you got to figure out that this is just 5 or 6 stocks that are running the market up this much. So it's way above the 61% retracement, a full 400 points. That in itself would look pretty bullish. But you can't do that because it's a market of stocks, not a stock market. So what you've got to do is you've got to look at each one of them. So if you take a look at the NASDAQ, and this is what we do when we're doing the letter each week, we look at the NASDAQ, and it's telling us a totally different picture. Look at this. The NASDAQ, we've got the Dow Jones way up here, folks. This is where the Dow Jones is trading up here. Here's where the NASDAQ is trading. We topped on the NASDAQ 7 days ago. All we did on Friday, make a 61% retracement. So it's a big divergence there. So one would think completing this A, B, C, D, the fact that the rest of the market is way up here, I mean, the only thing that's going to make this thing go is if it exploded on Sunday or Monday, and we didn't think that was a possibility because of the fact of the way that it closed on Friday. And remember, the day after Friday was supposed to be a positive up move in the market. Well, it was for the Dow. It was up about 24 points, but the Russell was down, the S&P was down, and the NASDAQ was down. That said, the odds are you're going to be down on Monday. And of course, Sunday night is when it started, and it did. Now, those of you that gets the video, the market gapped down sharply on Sunday. But what did it do, folks? Yes, Johnny, I see you've got the 382 paddle up in the air, so thank you very much. I'm going to have to send you to the woodshed here pretty soon because you're interrupting with the program here. Anyway, it went exactly to the 382 in the Dow Jones. It went exactly to the 382 in the NASDAQ and exactly to 382 in the S&P, and that number came in at 4016. It hit it twice. And then, of course, we dropped 30 handles from that level. And as we're heading down, we thought we'd get somewhere around 30, I think 39.74, I think, was a target for this move on the downside. And we're not too far from there. The last I saw, it was 39.86. Okay, now there's a couple others that I think that are important to remember here. You'll notice here in the S&P was another one that had some really interesting patterns as far as pattern completions. And here's again, why I don't need astrology too much, because I just look at patterns and that tells me what my risk is. Look at these moves here. You see the big move that we had right here? This is exactly what we had happen right here. This has taken longer to get to that level. See how quickly it got to this level right here? This level took quite a ways, took at least 3 times longer to get up to this level. And where was it at? Right near the 61% retracement at 40.30. And it made a new high at 40.50, I believe. Yeah, 40.50 was the high. And now we're trading, several hundred handles below that. Means it will probably get down into this area here over the next few days. And we're going to see what the market does from that point. So that's what I'm doing as I'm watching that. It tells me that this market closing badly on Friday has another probability of going to the downside. Now, if you want to do a little bit of homework yourself, do what the Russell did, and don't trade the Russell, so you can see that it did exactly the same that the others did. That's why it's so very important to pay very close attention to it. There's one other factor that was here that I thought would be interesting, and that was to show you the cash S&P market. I'm going to do that for several different reasons here. This is the cash S&P, and you'll notice here we got up to the 382, no problem. We're a little above that, but we didn't make the ABCD pattern here. So that's important. And the fact that we just missed the 50% retracement by quite a bit, you see, so that tells us the market was still weak. And we have the NASDAQ heading lower and the S&P cash heading lower on Friday. That tells us that the futures, that tells us you're probably going to be lower on Sunday, and that's what we're looking for. And so when we did the video on Sunday at 6 p.m. New York time, we saw the market open lower. The first thing we did was put in our 382 retracements and say, wait for those. And it turned out to work out pretty good. We had one in Treasury bonds, did not work pretty good, so we lost about $300 on that one. So that's sometimes they work, sometimes they don't. The gold would work great. The S&P worked really good, and we were happy with those to see what's going on here. So we're going to take a break here now, pay a few bills. We'll be right back with TFNN, and I will be able to answer any questions that you might have. 877-927-6648 if you do have any questions. Tomorrow's guest will be none other than John Person, my good friend from the Chicago Mercantile Days. Then Wednesday, we're going to have Stan Harley. Thursday, we will have, Thursday will be, Friday will be Shane Smolian. Thursday is Bill Meridian, folks. We'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and several people have asked me a question about where I thought the S&P was going to go. I will bring the chart up here to show you. This is a 30-minute S&P chart, so you'll be able to put it into your own time frame, but I'll get the picture up here post-haste, and we'll get it ready for you to see. It's a 30-minute S&P chart. Okay, now there was the gap down Sunday night. There was the first 382 retracement. There was the second 382 retracement. This leads us to this ABCD coming in here at the 50%. 1.618 expansion level off of this level right here, Okay, I mean, you take the 1.618, of course, off of this, but the retracement is the 50% retracement comes in right here at around the 39.75 level. Only 10 handles away from that. Now, the fact that we made it in one day means we may go down a lot lower, but you've got to get a profit objective somewhere in here of the trade that you're looking at, because if you don't have a profit objective, you don't know where the heck you're going to go. Now, if you wanted to be really, really super bearish, and you certainly could be, you could, lower your stop down quite a bit to protect at least $1,000 on this. But my way is to trade around this, so I would be looking to be a buyer down here and not necessarily go long, but I'd like to wait to see if we do get a rally to see what's going on. Because if I go long here in a bear market and I get stopped out, that's not the same feeling as if you sell into a bear market. So I hate to, you remember one of the main things that the traders hate to see is leaving money on the table. Yeah, I like to do that too, but I don't want to knock money off the table, even though I had a big profit. I'm not going to try to say that's it, but it should have some strong support there at the 39.76 level. Now, that's all I'm doing is just looking at the patterns. That's nothing more, nothing less, but we're starting to see that some of these things are starting to unfold. Frankly, I think we're going to go down a lot more, but that's what would be my first profit objective. And then I would be watching for a 382 retracement up about 30 handles up to that 400 to 404 level in that. And so that's what I would be paying attention to. Now, let's go back into history a long, long time ago. Every year, for many years, I think it was 10 or 12 years when I started doing this show in 2007, I would do a trade of the year. And I would pick out something that's usually on a weekly or monthly chart to see it would maybe be a really good trade that would last 6-7 months, maybe even as long as a year. Well, this is something that I don't trade, folks, but this is coffee. The cup of joe. Now look at this, folks. This is a weekly chart. So we've gone back here 3 years. We're making a 61% retracement right here. We've been here for 3 weeks now, folks, in this level around 250 a cup, 250 a pound in coffee, and so $2.50 a cup is cheap at Starbucks. Anyway, that's what we're looking at. This is what I would do: is I would pick a chart like this, and I would find one that had all the characteristics of the ABCDs, nothing to do with cycles or anything like that, just patterns and Fibonacci, little shake and bake. That's really what I'm looking at, trying to get the cake to come out of the oven correctly. So the next thing I would do is I would go to a little bit longer time frame just to see what coffee looked like on a monthly basis. So what I'm going to do now is I'll bring this chart up here showing you the monthly, and we'll put this up here. There's the monthly chart right there, and there's the monthly 61% retracement right there. And you notice here this is the 4th week of the month, so we've been here for a solid month. So that's going to hold. So we're going to make this the trade of the year for 2023. I've never traded it before, and I'm not going to do it now. But this is the kind of trade that I would do. If it closes below this low here that we've just had, that's down about a nickel from where we are. It's going to risk about $1,200. But that's what I would be looking at to see a pretty good rally. And a pretty good rally, could take you all the way up into this level here somewhere, which is a substantial amount of money. So that's the kind of thing that I was doing. Why did I stop it? I didn't have any losing trades of the year, folks. And all those years that I did it, I had about 7 or 8 really big ones right in a row. Then had a few that were basically break even. In other words, they would rally up and come down and rally up and come down, but they didn't do what I would expect a trade of the year to do. The problem was I got so much questions to answer about the trade. Why wasn't it working? Like, if I knew, how do I know it's going to work, right? And I just got tired of answering the questions. I said, I don't really need that. So why I did it today, I don't know, but I got a email from one of our oldest subscribers, and he said, why don't we do that? And I happened to be going through some of these charts, and I said, well, if I had to pick one, I'd have to pick coffee, something that I have not traded since 1973. That was the last time I put a coffee trade on, was 1973, and I think I've told you the story. I was long coffee, and coffee was limit up in 1973, and I said I better take profits, so I put an order in to sell the 2 contracts that I had at the market, and I got filled limit down. That was a swing of $5,000, and it was not their fault. I just happened that my timing was impeccable. That was the high of the market, and it was already starting to break by the time I put the order in, and by the time the order hit the desk, it was already limit down, and I never traded it ever since. That same thing happened to me in coffee, coffee, of course, and then it happened to me in cotton, and just missed it in cocoa. So coffee, cocoa, and cotton, do not trade them anymore. Haven't traded them for years, but they trade quite well, especially electronic now. They don't have that, brothers, sisters, and the nepotism that's in those pits, especially orange juice. Orange juice is owned by one particular family in New York, but they don't have pits anymore. But that's neither here nor there. They still pretty much control what's going on in the orange juice market. So that's why I'm watching that one. And we'll keep an eye on it once in a while. And I'm sure you folks, when you know it doesn't work, you'll let me know. And if it does work, let me know. But I do check coffee every week in the newsletter because everybody uses, well, not everybody, but a lot of people do use coffee, and including me. I have a cup every 3 or 4 days. Not a big drinker, of course, but that's what we're paying attention to as we look at here on the coffee today. So it's been here for 3 weeks on the 618 on the monthly, and then also the weekly, the big ABCD. And if you like Fibonacci, that's the kind of thing that you want to be, looking for to see what's going on. So we're going to have another minute and a half here. I want to review what we're going to have for our guests this week. Tomorrow we're going to have John Person. He has a really great website and a service. He was on the market floor at the same time I was. Really nice fellow. He and his lovely wife Mary run their business. Wednesday we're going to have Stan Harley of the Harley Stock Market Letter. Bill Cerubi of Cycles Research coming out of Vienna, Austria on Thursday, and on Friday we'll have Shane Smolian, and then early in December, that's the December 2nd is early in December, but the following week we're going to have hopefully both Peter Leides and Larry Williams as our guest in early December. Always good guests to give us some great information. Those are just a few of the things. One of the questions that someone's posed to me here on the show this morning, how do I start my day as far as the meditation part? It's very simple, folks. I use a little 2-minute meditation right out of Mark's book, telling you that you don't really know what's going to happen next. It's not important that you know what's going to happen next because you're never going to know that. And all you have to do is to put your orders in the way they're supposed to be put in, and you should be okay in the long run. And that's what I'm here for, is the long run. I'm not here, to swing for the bleachers. I'm here to make a little money as we move along the trading road here. So let's take a break. 877-927-6648. Billy Ray Valentine.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks. I posted a chart of heating oil. This is right out of the newsletter now. You'll notice here I have this 618 level right here because that happens to be a very important spot on the long-term weeklies too. This is a daily chart. But you'll notice here we have a potential triple bottom down here. Now, we had a big reversal. I haven't checked heating oil today, but I know we had a big reversal here of $5 a barrel in crude oil. So this is another one to watch here. This is a strong seasonal, folks. December, January, February, those are the 3 very, very cold months of the year based on the old calendar. And so maybe this will be one of those times where we have one of the warmest winters in the world. It's not starting out that way, but that could be very, very important right here. But it's a strong seasonal that could be a triple bottom. Now, if it is, I'll be watching that for tomorrow. I'll be updating these charts to see where we are. And we want to watch those because there's a strong seasonality in these things, and seasonalities are all cycle related, and that's the main thing to look at too. Now, gasoline is not so much of a seasonal, but let's take a look at where gasoline is. And gasoline prices here in Tucson have dropped quite a bit. They've dropped well over 45 cents a gallon here in the last several months, but here's where we're sitting right at a 61% retracement. So we need to watch that today on the charts tonight to make sure that, this thing is taking out the lows and then starts to bounce. That could be a major, major bottom in here to pay attention. Look at this one here, folks. This was the 382 off the low way back in here. This is before we had the run up, during into the war, and everybody blamed everybody for higher oil prices. It didn't make any difference what it was. They were still going to go higher. But we've been watching this gasoline and the heating oil. We've already seen what crude oil's done today. But we'll watch the rest of these to see if this is going to be a case where they might be making a false bottom, scare everybody out, and then the real bottom starts to go. We've seen this, more than you might possibly even think about. If we take a look again, just to review here for today, I want to bring this up here to show you, because this is the crude oil again. It'll show you the weakness that we've seen all along here. There was the 382 the first time, the 382 the second time. What we've done now is we've cleaned out all of these longs in here. So those longs have come down to 72, and now we're trading up at 78. So it's had a heck of a rally today. Whether that's going to be just a bounce, which it certainly could be, or it's got more legs to the upside. We need to watch that because we're at a really strong level. Look at the 382 back here, folks. Stop and think, folks. We were at $140 a barrel, and they told us it was going to go to $200 a barrel. I don't know who they is, but somebody was telling us that. I don't know who it was, but they were telling us it was going to probably Goldman Sachs. That's one of their favorite things, and I have nothing against Goldman Sachs. They're traders. That's what their job is to confuse everybody, and they do a wonderful job at it. But as you can see here, this market has been in a very, very bearish market in the midst of a war that's going on in the Ukraine, and supplies with the Saudis have been tough. So all of this stuff is not anything that's what's happening in the market. The prices are going down. There's more sellers. Prices are going down. There's more buyers. It doesn't make any difference where it's Astro, Primo, whatever it happens to be. Just look at the charts, and if they'll tell you they're going down, they're going down. If they're going up, they're going up. That's what you got to know. This is a bearish market. It's been bearish since it made the high last March, 18 months ago. 18 months ago. So anyway, that's what we're paying attention to when we're looking at some of these things here today. There could be a major bottom in the gasoline, heating oil, and crude oil, but we do not know that for sure. We'll know that in a day or two when the market has exploded more to the upside, if it does. And if it doesn't, that's also telling us something that we're looking that's going to be, very, very important to watch these things unfold as we look at these each day. At least that's the way I look at it, and I think I'm just a simple guy looking at AB equals CDs. That's really all I'm looking at. I don't really do much other than that. It makes it pretty easy, to look at these things when you're doing them one at a time without too much too much information, and that's what ABC does. It gets rid of all the information that's not important, and that tells you pretty much where you want to be, and that's where you want to be looking on these things today to see what's going on. So I hope that helps, give you an idea that, I do believe in astrology a whole lot. I don't understand it even more. And so I don't use it unless there's something that's absolutely jumps out at me that, some of the things that Tim Boss has brought, and also Norm Winsky and Shane Smolian, Bill Meridian, when they see some of these things that add to it, then yes, I'll add it to it. But when it basically comes down, I'm an ABCD guy. I'm always going to be ABCD. Nothing's going to change. I keep it as simple as possible, and that's what brought me to the finish line. And the finish line, I hope, is at least 6 more furlongs to go on the outside, but who knows? We'll have to do one thing at a time. But with these markets, they trade the same way, folks. In Andrew Lowe's book, The Non-Random Walk Down Wall Street, and also his book, The Evolution of Technical Analysis, he spent 50 pages of that first book describing that the first technicians were the astrologers, Sumerians and Babylonians, back 5,000 and 7,000 years ago, when they marked in Mercury and the moon and stuff with the and Venus in the crops of corn and wheat during those times. So that all this stuff has interrelationships, but my interrelationships with it is to keep it as simple as possible so I can understand it. If I'm going to teach somebody how to do this, I got to be able to teach them in a way that I know works. And all I know is that Benoit Mandelbrot proved to me that, by golly, this is nothing more than AB equals CD. That's the seed. Once you have that seed, and that seed came from H.M. Gartley, Profits in the Stock Market, 1937, at a cost of $1,500, and it was 500 loose-leaf binded paper. It was not printed in any book. It was in a loose-leaf binder, and he sold 15 copies at $1,500. That is $2,500, $225,000, I believe, and that was the cost. One Ford automobile during that time frame, 1937, was $300. So for 5 Ford automobiles, you got the trading system of the century. But it took you probably one other century to figure out what was in the book. So that's neither here nor there. Bitcoin. Let's talk about Bitcoin for just a second here. We got a break coming up. We're in the midst of coming down to an area that our good friend John Jameson has been waiting for. Pay attention, folks, because this is not a tulip bulb. This is actual something that's going to happen. I don't know how it's going to happen, but pay attention here, because if we can get below $10,000, John thinks between $10,000 and $6,000, we got a chance here to look at some of these, not just Ethereum and not just Bitcoin, but some of the others that we have on our watch list, because if that happens, it could be Christmas Day. And if it's wrong, they're going to take a few shekels from us, but not very many, because the risk here is going to be really, really small when we get down to this level. Not at this level. Never hatchy. No, as the Lone Ranger would say, never happen. We have to wait until it reaches our price level, and that's what we want to be waiting for. We'll be right back. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I posted a chart of the Treasury notes. That's the largest of all the commodities we trade. It's got 6 times the open interest of the E-mini S&P and double what it is in the bonds. It's how you get your interest rates and your credit card stuff, as we already know. But the thing is, you notice that 382 that was there that we hit it 3 times in a week. First week, second week, third week, 3 times in a row. That's a 3 drive to a top pattern right at the 382. And we've rallied quite a bit off the bottom. So now we're going to be watching what this retracement is going to be. Now, if it's going to be a deep retracement, it's probably going to mean we're going to be lower on stocks. When we started this program, we were looking at the S&P at a price level of 39.76. I just checked a minute ago. It was 39.79 was the low. So at 39.76, that would be the profit objective on that sell at the 382 at 40.16. And then we'll reevaluate it from what's going on at that level. Regarding the gold, if you were able to sell the gold like we suggested last night at the 17.55, we bought it at 17.25, and we're looking to buy it back at around 75. Try it again, Larry. 17.05 is what we're looking to try to buy the gold back. Now, you might think that $50 is a lot. Folks, we can go up 100, it can come down 50. So let's pay attention to that one. We cover that in the videos that we do each day. And by the way, all the videos go out instantaneous now, folks. When I send them out, you get them exactly within 1 minute of when I get them. So there's no saying, gosh, I got it 3 hours late. And that was a problem before, but not anymore. We've got this new system called Vimeo that's working really well. And I think we're going to be able to get these things out quickly. So as of today, it's working perfectly. If it isn't, then I'm certainly going to let you know. So remember, live every day in an attitude of gratitude, and may God bless. We'll see you on the flip side tomorrow, and we'll really enjoy it. Our guest will be John Person. So we'll see you tomorrow, folks. May God bless.